What's going on YouTube? It's your guy TK the Official. Today we're going to go over one of the most talked about stocks in the stock market, both yours and my favorite movie theater, AMC, how it used to look and how it looks now, and if this is the week we've all been waiting for. So in today's video, we're going to discuss why is AMC a good play and what's all the hype? What is a short squeeze? What is short laddering? And just exactly how much do I think the price may get to? Now, before we get into the video, I'm very excited to be bringing you my very first video inspired by my Wall Street Bets, Facebook, StockTwits, Twitter, and Discord families. I'll be bringing updates on AMC and other exciting big time and long-term plays. And for those who are new to the market, videos daily on market terminology and market strategy, because I know it could be a bit confusing. So go ahead and do yourself and me a favor. Hit the subscribe button as I'll be uploading new videos daily to keep you guys informed. Make sure you like, comment, and share your videos. Hey guys, it's TK. It's Super Bowl Sunday, but more important than that, it's the eve of another Monday to kick off a week of what could be a very, very big week for most of us in the stock market. Extremely important for those who are holding AMC. Now, for those who are new to the channel and those who are new to the stock market in general and to AMC stock, let me get you caught up on what's been going on and what all the buzz is about. Okay. So this is ticker symbol AMC, as you can see up at the top. Now, this is just a month chart. But if I went back a year, you can see that at one point in time, AMC was trading for $30 a share and was thriving. And now when we look at it today, we can see that as I start to go over on this chart, that we have settled now here today at roughly about $6.83. Okay, what happened? We know what happened. Corona happened. And one of the biggest industries affected by the pandemic was none other than the movie business industry. This article, written by CNBC back in December, bankruptcy could be AMC's best option to survive the coronavirus pandemic. The cinema chain headed into the pandemic with nearly $5 billion in debt. Even after a $100 million investment, AMC still needs at least $750 million of additional liquidity to fund requirements through 2021. Check this out. AMC Entertainment Holdings, the world's largest movie theater chain, has launched efforts to sell more than $700 million worth of stock, while warning that failing to raise enough liquidity might force the company into a bankruptcy. The equity sale could help AMC avoid a debt default if the company can generate enough dollars to last until the widespread vaccination against COVID-19 helps bring moviegoers back to movie theaters. Now, at this point in time, the sharks were already in the water, and hedge funds were doubling down on the fact that AMC was going to go bankrupt, and they were short selling the stock like crazy. And this is what it's been about. And a lot of us aren't quite sure what short selling is, so let me explain. Short selling occurs when an investor borrows a security and sells it in the open market, planning to buy it back later for less money. Short sellers bet on and profit from a drop in the security's price. This can be in direct contrast with long-term investors who want the price to go up. Okay, short selling. So let's say I borrow 100 stocks at a $20 price. And I'm betting that this stock is going to go down. So in a month's time, I'm going to come back to you and I'm hoping that this stock is, say, to make it easy, $10. So now I borrowed 100 shares at a $20 price. And now they're $10 at the time that I'm ready to purchase those shares and give them back. So now I'm getting $10 for each share that I have. I have 100 shares, getting $10 a piece. 100 times 10 is 1,000. And that's where the profit is made off of short selling. Okay, so let's talk about what short laddering is. Short laddering is pretty much when you have two hedge funds who are screwed and who are trying to get the price down so that they can either get it to a level where they can either break even or they can get it to a level where it doesn't hurt them too much to have to pay to repurchase their shares. Now, what they do is they buy shares and then they sell them to themselves or to their partners at a lower price. For example, I buy a share at $20. I then sell it to you for $19.90. You then sell it to me for $19.80. I then sell it to you for $19.60. It's pretty much a game of hot potato.
Alright, so it's simple. And what that does is it tricks the computer's algorithm into thinking that millions and millions of shares are being brought for a lower price. And what that does is it makes it think that the price of the stock is dropping. And what it does is it drops the stock.
However, these hedge funds are incurring interest every day, and we're talking millions and millions of dollars on these shares by the day. Not only are they incurring interest in millions of dollars, but they are spending millions of dollars and also losing millions of dollars by buying these shares and then selling them to their partners for a lower price. And each and every time they go back and forth, back and forth, back and forth, they are losing money doing that. But they're doing that in the effort to drive the stock down to save them from losing the big money in the long run. Okay, so let's take a look at the short interest in this stock. Then we can just start back in January. $385.50 million, $83.78 million, $75.40 million, $93.83 million, $124.94 million, $70.95, $62.27. Guys, they are behind. Look at these numbers. You see the pluses, but these numbers are in red. These guys are massively behind. 14.6% interest, 13.6%, 13.6% behind, 14.5% down. These guys are down big, and they're paying interest on these shares each and every day, and they're going to break. And what we're doing, we're just waiting for that moment, guys. So, guys, just relax. Just relax. I'm telling you, they cannot keep this up for too much longer. Now, wow, there is no definite day that these guys have to pay the money back by. Theoretically, they can incur interest each and every day so long as they thought that this exercise in futility was worth it. Eventually, what's going to happen is that game of hot potato that they've been playing is going to end up like this. So what I have here is a chart comparison. And you don't have to be that much of an expert to be able to look at these two charts and can plainly see the similarities in these two. You see a precipitous drop, you see a little bounce up, and then you see a slow, almost traceable line all the way down trying to get to the bottom line there. And what that is that hedge fund companies trading and selling the stocks for lower prices back and forth to themselves, trying to ensure that they can get the stock price either down to a point where they can be profitable to where they can break even, or a place where they'll feel comfortable losing the money to. We've all seen what happened with GameStop. GameStop price didn't rise all the way up to $475 because people started selling when they got to $100. It didn't happen because people started selling when they got to $200. And it didn't happen because people started selling when they got to $300. Hold your shares. Now, you may have heard a lot of comparisons to the chart and to the squeeze that happened with Volkswagen back in 2008. If you see down there in the deepest crest right before its highest point, that's to be said where we are with AMC. Now, again, I'm not a financial advisor. However, I am someone who is heavily invested in the stock. Okay, guys, so here it is. If you haven't figured it out by now, I'm clearly bullish on the stock. And here's my portfolio. I'm heavily invested in the stock. I have 776 shares. And if you count it there, I have about 60 call options. Okay, so I'm clearly locked and loaded and ready to go. Okay, guys, so listen, if you guys lose money, I lose money. Okay, so understand, I know some of you guys are new to the stock market. Some of you guys have just gotten into the game. Understand, you're going to be down sometimes. That is a part of it. Stocks have ebbs and flows. Okay, but you hold it. You're never at a loss until you sell it. Okay, understand that. That's the most important thing. You did not lose it if you did not sell it. Now, I've got some options and things there, and in another video, I'll go over with you guys what our options are. I know some of you might not be quite sure what they are, and if you can notice there, I have the dates blocked out. Options are only good for a certain amount of time. They're like contracts, and you have to select what date they're going to expire by. These guys, they're watching things on social media, man. They hear us talking about what dates we're expecting these things to happen, and you never know. They just may hold out another week to get some of us to try to sell our stocks and not be able to make that money money and for them to be able to take our shares. So that's why I have those days blocked out there. But in another video, I'll explain to you guys exactly what options are and how beneficial they are to you. In fact, maybe I'll do one today so you guys can get some. So at some point in time, these hedge funds are going to have no choice but to raise the price so high when they repurchase their shares that they try to price a lot of us out. And what they're really going to do is psychologically mess with our minds to think that we should sell our shares. Because remember, they need our shares in order to buy back those shares and then short the stock again and bring the price to come crashing all the way down, which is why it is imperative that if and when the stock price starts to go up, even if it jumps up to $100 from $10, please do not sell your shares. Listen to this. This is a psychological experiment in finance in many years. Let's take a look. We know that if the little guy bands together and holds together, it's a guaranteed win. That's not speculation. That's fact. The amount of short shares simply exceeds the amount needed to cover them. If we collectively buy and hold, no matter what, we will win big and we can walk away wealthy. Our resistance is not to the short selling hedge funds. It's to our two emotions, greed and fear. Greed when we see it start going up $10 and $20 jumps and we want to grab small profits at the expense of others. And fear when we see it dropping and panic sell. And yet hedge funds are still shorting the stock today because they believe that we cannot win out on those two emotions. Here we have some of the larger hedge funds or larger institutional buying that are here inside of the AMC stock. Now we can see one of the larger investment companies that have invested in the AMC right here at the top is BlackRock. Now we could tell they already had a slight holding in AMC, but you can tell that they increased their holding 69%. From what I can see there. And you can also look at the other companies and see what they've increased there too. Now, the reason why I pointed out BlackRock is because BlackRock is the same company that invested in GameStop before it took its meteoric rise. Guys, there's big institutional buying in AMC. There's big money in AMC. And that means that there's big money behind us and us as in the little guy in AMC. We are protected. I will be the first to let you know when and if I'm selling my shares, why I sold my shares, and if I think it's a good idea for you to sell your shares. Guys, come and join the family here on Wall Street Bets. We have a great time each and every day, keeping each other up to date on what's going on. Download Reddit on your app and then go into the finance investment part. Look up stocks and then find Wall Street Bets and look up whatever stock you're interested in, particularly AMC. Come on over to Facebook if you're not into Reddit. We have thousands of members here, just like we do on Wall Street Bets. We have thousands of members on StockTwits. We have thousands of members on Twitter, on Discord. It's a big family here. So if you're in it, if you're interested in it, if you're thinking about getting in it, come on in. Okay, guys. So that was a little bit of a long review on what's been going on with AMC. But to anyone who's new to AMC and is trying to figure out, or is new to the stock market and is trying to figure out exactly just what's going on, I just wanted to make sure that we catch everybody up exactly to where we are. Please like, comment, and subscribe down below and let me know exactly how you feel about the video. Your feedback is much appreciated as I'm just getting started in this endeavor. You can follow me on all social media at TK_the_official. It's been my pleasure. And if you're still here with me watching this video, much appreciated. Peace out.
Watch me